Hi, everyone. Today we're going to talk about some tax deductions that are gone for 2018. And what I mean by that is the tax year 2018, so the returns that you'll be filing this April 15th here in 2019. So recent tax reform made a lot of changes, and they're mostly in the form of either capping or limiting deductions that we used to get. But the trade-off is that our standard deduction has nearly doubled. So it used to be $6,350 for individuals, and now it's $12,000 for individuals, just by way of example. So there is a lot of give and take here, but let's talk about some of the examples of deductions that are now gone and how that might impact you. Hi, Janice.
Hi, Anthony. How are you?
Have you done your taxes yet?
I am preparing to do my taxes, and upon reading this article to prepare for us talking, I was, this is going to be interesting. I'm looking forward to chatting with you.
All right, let's just jump right into it then. Number one, personal exemptions, gone.
Ouch.
Yeah, so anyone who doesn't know, it used to be you would get a roughly $4,000 personal exemption per family member. And then on top of that, you would get your standard deduction, which again, we mentioned earlier was $350. So if you can sort of suss it out, this is going to have a disproportionate impact on big families, right? So if you're like a married couple, you have two people in your household, that would have been $8,000 in personal exemption, 2 times 4,000, plus $6,000 in standard deduction. So we're at, what is that? 6 plus 8 is 14,000 and change was your starting point deductions. And you could decide from that point if you wanted to do itemize or not. But if you have a family, let's say you have 4 kids, right? Janice, you have a big family, yeah?
I do, yes. When all said and done at the end of the year, we claim 2 children and 2 adults.
Oh, so your household is four adults or four dependents? Yeah.
We have 4 dependents, but 2 dependents are on our tax returns. You know,
Got
that
it.
Blended family stuff. So
Understand.
But this personal exemption that's going away,
yeah,
could hurt.
But I'll use an example of a family with 4 kids. So a family of 6, that in the past, just last year, they would have gotten 16 plus $22,000 of a starting off point of deductions, and this year it'll be 12. So cut in half.
Wow.
So that's a pretty big impact on big families. If you have a big family, go talk to your CPA and just make sure you can cushion the fall, or maybe there's other ways that will make this better for you, right? But just be aware that that's out there. Yeah.
Exactly. And just, you know what, we're on number 1, and already I'm thinking this is not a year to do it yourself. This is a year to talk to a professional and just do it right.
I do think there's going to be a lot of, sticker shock. They passed the law almost a year ago, right? But you don't feel the impacts until the subsequent April 15th, right? So...
Right.
Like it was in the news such a long time ago, people have forgotten about it. And now as folks are filing their returns, they're going to realize, oh, wow, what was this again? Yikes. This,
I've gotten a lot
hurts.
of feedback from friends and coworkers and such. It hasn't been exactly an easy year on the wallet at all.
All
right. So it'll be very interesting to see what happens at the end when most everyone is filed, but
all right.
I'll report back. We'll see.
Yes, please do. And anyone listening, throw your comments into the comments, or hit us up on social media. I'd love to know how everyone from your different walks of life are being affected by this, just because it's interesting. Yeah.
It is interesting because I was under the impression when this all came out before reading into it that it was going to make it a little easier on us. Mm-hmm. But when in turn, it seems like now, I mean, I'm only talking about a few people so far that have said they didn't get anything back, and they actually had to pay for the first time in years. So it'll be interesting to see how it plays out.
Well, the good news is this first one that we talked about, the personal exemption, is the real hammer, and the rest seems to deal more with very specific groups. So hopefully the bad news is over. We've torn the Band-Aid off, yeah?
Okay. All right. That's about all I can take.
All right. Let's jump into number 2 of tax deductions that are gone for 2018. There are no longer unlimited salt deductions. All right. First, of course, let me explain what salt deductions are. It's not a seasoning. Okay.
Pepper?
SALT is an acronym for state and local taxes. So the way it used to be is if you decided to itemize your tax or your deductions, you could deduct your state and if you lived in a city income tax as well as your property tax, right? So this only made a difference if those amounts, your state and local and property taxes, worked out to be more than your standard deduction and personal exemptions, right? Does that make sense?
Right.
If
Yes,
it wasn't
yeah.
more, you would just stick with your standard deduction, right?
Correct.
So instead of, it used to be you can deduct a limitless amount, but now it's capped at you can only deduct up to 10,000 of state, local, and property taxes. So who does this impact? Anyone who used to pay more than 10,000 in state, local, or property taxes.
And I have a feeling New York,
Yep.
where you're at, that can't. Yeah. How does that feel in New York?
This is going to really, the people who are going to feel this are the folks living on the coasts, because California and New York, just by way of example, are two of the highest state income taxers, right? They have the highest rates at the state level. New York City has its own tax on top of the state, New York state income tax. And this is not about California and New York, but anywhere, if you live in a county that has pretty high property taxes. Because it's easy to imagine homes with, super elite school districts where the property taxes did exceed $10,000 per year, Janice, is it hard to imagine like one of those uber good school zones charging, or levying more than, $800 a month in property tax?
Ouch. Yeah, but you know what? I mean, the better the schools, the higher the property taxes go.
Yeah.
I mean, it's just the reality.
So, for a lot of folks, you're not even going to notice this. But if you're in New York or California or any other high, state level tax state, or if you have high property taxes, let's just put it that way, then you will notice, and you won't like it,
Yes.
most likely. Yeah. Sorry. Oh wow. I love being. I don't love being the bearer of bad news. I know, right?
Fantastic news today. We sound so chipper, yet we're just giving them such great information.
I have a big smile on my face, telling you that you're losing this deduction. You're losing that deduction.
You're gonna lose.
All right.
But at least if you're going to do it with a smile.
So number 3, again, this is deductions that are going away starting this year. Interest on mortgages above $750,000. So this is a narrow population of folks. I don't think a lot of people are taking. I mean, that's a jumbo mortgage, if I understand correctly. That's a non-conforming mortgage. So not a whole lot of people do this anyway. So this is just for the few folks who might be in this boat. The old rule was it was capped at $1 million, and now it's capped at $750,000. I don't think this impacts a lot of people, so I don't want to spend too much time on it.
But that's a pretty big jump. I mean, if you
or drop down, you mean? Yeah.
That's what I mean. Yep. It's definitely a big drop down. Absolutely.
Oh, one good piece of news.
It hurts.
Yeah, anyone who already has a mortgage between $750,000 and $1 million, meaning they qualified under the old rules, they're grandfathered in. The IRS is not going to start disallowing you to deduct interest on that mortgage. But any new mortgage, above $750,000, you won't be able to deduct the interest.
Interesting.
So, yeah. All right. Moving on. Number 4, moving expenses. Okay. Can you take this one, Janice?
Yeah, this is pretty simple. It used to be, they called it an above-the-line deduction. Mm-hmm. You can deduct even if you weren't itemizing. But more bearer of good news, it's gone. That's it. I mean, enough said. Unless you're active military, then it still applies. But for the rest of us, not happening. I mean,
honestly, I never really understood this one. It didn't really move the needle for a lot of people. Meaning, your moving expenses were not going to be so much that the commensurate deduction really changed your return that much. So I just thought it was I always wondered why that was there, basically.
I wonder if you think of how much it would cost you to move from one side of the country to the other, or maybe one country to another country. I mean, that could probably get really expensive.
See, you just exposed how narrow my scope is. I lived in the city my whole life, so I've never moved more than like a few miles.
Oh, see, and I've moved from Florida to Pennsylvania, so
right there you go.
It's not cheap, even though we did it ourselves, but it can probably add up.
Okay, so then that deduction probably does make sense for, relocate, like true relocation, not just moving from one apartment to the other.
Oh, correct.
Makes sense.
True, like far relocation.
Thanks for putting me in my place. Thank you.
Oh, you're welcome. All this good news you're giving us, I'm just
All right.
Let's keep going. More good news.
More good news. The last deduction that will no longer be allowed starting this year, professional fees. You used to be able to deduct tax preparer fees, legal fees, and investment advisor fees. Not anymore. I mean, there's no further explanation. Yeah.
I mean, no, you just can't do it. Which, I think, again, for some people could probably really add up.
Yeah. So I don't know if this actually impacts trusts and estates, which, Janice, you and I do. So I'm curious now, making me think. But I guess I'll see when we do our returns for our many, many trusts and estates.
Yes, that'll be interesting. It'll just be interesting to see how it all plays out. And please leave comments. I'd love to hear, and you'd love to hear, like, how did it go this year compared to years past? So
that's it. No more, I promise. There's at least not from our list.
Sure, you don't want to give us any more bad news, any good news, or?
So the first one is really going to affect a lot of people, especially big families, and it seems odd to kind of give it, give the shaft to people who are just having lots of kids. But we'll see if there's maybe there's a counter credit out there that balances that. Please, let us know. And the only other one that I think that's going to affect a lot of people where I'm at least, in New York, here in New York, is the cap on SALT deductions. That's really going to hurt New York residents. Well, I'll report back, Janice, what I hear from my friends and colleagues. Yeah,
absolutely. It'll be very interesting to see how it all plays out. And if I'm not mistaken from reading this, the next time they're going to look at some of these is in 2026. Is that correct?
Yeah, I mean that's what some of these changes sunset in 2026, meaning they're only good until 2026. That's a new way of doing tax changes. It's so weird. We exist under a tax law that's been constantly patched since 1986. We haven't done a comprehensive overhaul in a long time. So we're on Reagan's tax system with a lot of Raggedy Ann patchwork on it.
Got it. Okay.
Yeah. Okay. But anyway, yes. So some of these will sunset in 2026, meaning it'll revert back to how it was as of 2017, unless Congress does something to make it permanent or make more patches. Yeah.
Correct.
Yeah.
Well, it'll be interesting to see how it plays out, and it may make you do things differently this year in preparation for next year, because we're going to have to deal with the same thing.
Right on. So please, those are the 5 deductions that are gone. Please report back in the comments, social media. Let us know. Just curious. And otherwise, that's all we have for today. Thank you, Janice. I'll talk to you later.
Thank you. I will talk soon.
Bye now.